What's up, YouTube? CFX here back with another video. And in this video, I'm about to talk about the best strategy that you can use when you are a beginner trader. Now, there are a lot of videos out there with all different type of indicators and all this other stuff that you can add to your charts. But what I actually want to cover is the most powerful strategy of them all, and that is market structure. I don't care what type of indicator strategy you may use or learn, market structure is always the base of your strategy. So with that being said, let's get started. So I'm gonna go over some trades that I took this week on starting with Euro NZD, and I'm gonna show you guys. So this was my note for this trade right here, right? And at first I had my I believe my field was like right here. Or no, it was right here. So actually, let me go back to the Telegram chat. I can show you guys up there. This one, I believe, yes. No, it's UJ. Even though we did end up winning that trade as well. I believe this is it right here. So yes, I did have my field right there. So this was the trade that I ended up sending at the beginning of this week. You guys can see the date, April the 2nd. It is currently April the 7th. So I said, looking for this to continue to sell down to the -27 or the -61.8. Wait for confirmation breaks of structure, lower lows and lower highs. So now let's get back to the charts. And let me actually show you guys how you can read this trade by just simply following market structure. So how do I mark up my charts, right? Let's start with that. What I like to do and what I teach my students in my course how to mark up their charts is do a top-down analysis. Top-down analysis, right? So a top-down analysis is starting from the daily chart and working your way down. Now, some people like to start from the monthly to the weekly, depending on what type of trader you are, right? Depending on if you're a swing trader, a scalper, or a day trader. It really depends on what you are. So I do suggest that you find out what type of trader you are. If you are a person that don't like to stay in trades for too long, then you will be a either a scalper or a day trader. If you are a person who has patience, and stay in trades however long it may need to take in order for you to hit your TP or the case may be, then you are a swing trader. So here, I'm gonna be honest, I'm more so of a swing trader. So that's why I start from the daily and I work my way down. So as you guys can see on the daily chart, I started from, let's see, actually, I'm gonna start on a whole new chart so you guys can see how I actually trade. So I'm gonna go with study. This should be clear. Yeah. So I'm gonna start with the daily chart, and as you guys can see, we have been in a downtrend, right? So first thing I like to do is find out what type of trend I am in the market, right? I find out what type of trend I'm in, and as you guys can see, for a while, the market has been moving down, right? The market has been moving down. So I have a downtrend right here, and I mark up my trends on the outside of the wicks. Some people like to mark it all the way down to the candlesticks. I like to do it down to the wicks. So we've been in a downtrend. We've already established that. I work my way down to the 4-hour. Now, there are different type of trends, right? You have a primary trend and you have a secondary trend. Your primary trend will always be the main movement or the main direction that the market is going in, right? Now, we do know that the market does not move in a straight line. So our secondary trends can be like these small uptrends right here, or even like this one right here, this small uptrend. So these will be your secondary trend. So our overall movement of the market is going down, right? But we do have these minor pullbacks and these minor uptrends that travels back up to the downtrend line. So therefore the market can continue to go down. So now we have identified our trends. I see where I'm at in the market right now. We are currently right here in the market, right? I know that because this is where my ticker is. This black box right here is basically your indication of where you are in the market. It tells you the price level that it is at and everything. So next, I want to move on to like support and resistance or supply and demand, depending on what type you like to use. Me personally, I like to use supply and demand. I like to more so trade in zones, or I like to have a zone of like my support and my resistance areas instead of specific price points. And the reason that's why is because you get things like this where the market wicks out at a certain area, or like right up here, it wicked out at the trend line. And I like to pretty much look at a zone that the market could either buy out of or sell out of, instead of a specific price point, because it could go a little bit higher or it could go a little bit lower, things like that. So that's why I like to trade. Hold on. Give me 1 second, guys. Check something real quick. Let's say 540. Some minor differences in charts, but that's all right. So back to what I was saying. I like to find support and resistance areas. So like here, we had a support. You can just look to the past. You got a resistance right here. Right now, like looking at the moment right now, like we got a minor resistance right here. So, just finding areas in the market where you had a quick or sharp change in direction. So like here, the market was going all the way down, right? Until we got to this area right here, which is now my support. And why is this my support? Because it stopped the downtrend and made the market move back up. So this is a strong area where buyers are in the market. Okay. Same thing for my resistance. Why is this my resistance right here? Because the market was buying up. What made the market, or what area did the market have to come into in order for it to continue to sell back down? It came back into this area right here that made us enter a bearish market, tried to come near that area again, and then continue to sell back down. So just a simple explanation of support and resistance, right? So now that we have identified our support and resistance, we identified our trend, we now know where we are in the market. Let's try to see how everything lines up on a smaller time frame, right? Let's see how everything lines up on a smaller time frame. So I go down to the 1 hour, and I see right now that we get more detailed view on our uptrend. We also get a more detailed view on like breakup structure, which is what I'm about to go over pretty soon. But you get a more detailed look at what's going on in the market by looking at our candlesticks right here, right? So now I'm gonna continue to work down, see what else is going on. And the thing about trading, no matter what type of trader you are, honestly, you always want to make sure that what is lining up on your minor or smaller time frames, basically like from the 1 minute to I'd say about 15 minutes, depending on what type of trader you are. You want to make sure that it lines up with what is going on the major time frames, so the 4 hour and the daily. So once you get everything lining up, like we see a more detailed view of our uptrend, right? Our secondary uptrend. Now, this is very important because we already established that the major movement of the market is going down, right? But right here on a 30-minute, it looks like the market is going up. Why? Because we have now brought ourselves to a lower time frame, and we're looking at what is going on right now and not what is going on in the overall movement. So that's why it's very important to understand where you are in the overall movement of the market and not just the right now, because you don't want to trade this and think, okay, this is going to buy up for a very long time or anything like that. And overall, the market is actually, selling down. So you may get to an area where the market may reverse back down and you're in for a buy and you're wondering, why am I out of profit? It's because you ignored the overall movement of the market. So here we are now. We have our resistance. And as we went down to a lower time frame, we see like what actually went on here. So now we're about to get into market structure, more so price action and understanding like patterns of the market. So here we see that the market is, if I was to switch to a line chart, we will see that the market is creating higher highs and higher lows, right? So just to sum it all up, if the market continues to create higher highs and higher lows, then the market will continue to move up. If the market continues to create lower lows and lower highs, then the market will continue to move down. Just to sum it all up. So here we see that the market is creating higher highs. And if I was to go to the 4-hour, you will see it a little bit more clearly. So we see that the market is creating higher highs, right? And higher lows, higher high, higher low, higher high, higher low, right? And then it creates another higher high right here, and so on and so forth. Like we're at this price. But if you guys look closely, the market didn't necessarily create a higher low, but it did create a higher high. Now, this market is still valid to continue to go up in an uptrend because why? It failed to break the previous higher low. So basically, even though it did not create a higher low, it did not create a lower low either. So this market is still valid to go in the uptrend and continue to buy up until it breaks this lower high. This higher low right here. Until it breaks this area, which is our support, then the market is still valid to buy up. Now, once it does break this support, then that is what we call a breakup structure. Now, when the market is usually in a trend and it breaks that trend, that is usually when it ends up breaking the structure that is currently trading off of. So like right now we're trading off a structure of this support, but we're also in an uptrend. So if I look at this market right here and the market ends up breaking this uptrend right now, then it will be, you can go ahead and say like it basically broke this support as well, because once it breaks this trend, it's going to end up breaking this support, and that is when we will consider it a break of structure. So once it ends up breaking this area or this support area, and it breaks this uptrend, we can get ready to say that the market is more than likely about to reverse and stop buying up and continue to sell down. For how long? We could use like areas of interest in the market to determine that. But for right now, just to keep it all simple, we're just gonna focus on the breakup structure. So if the market was to make this type of move, then that is when we will consider this a breakup structure. So let me grab do this real quick. So just trying to draw this up in candlestick form so you guys can kind of get a visual on it. So this is what I mean by breakup structure. So if it was to break the trend, you guys see that it will automatically break this support right here, come back and retest it right here. Boom. And then continue to sell down. So if you guys have not put it together yet, this is the most powerful strategy, in my opinion, on market structure. Just trading simple market structure. So first, we got the downtrend. We found our areas of support and resistance. Now, let's get to the part of where we actually take the trade. And this is what I want you guys to practice. I want you guys to practice marking up your charts with the trend lines. I want you guys to practice marking up your charts with areas of support and resistance or supply and demand zones, and identifying when the market is about to reverse or if the market is about to continue. Because there are three moves in the market. You have your impulse, which is your breaks. You have your correction, and then continuation, right? This is what it looks like for a buy. Now for a sell, you still have the same three things: impulse, correction, continuation, right? Did not try to do that last one. Like this. So you have your impulse, correction, continuation, right? Now, in other terms, some may call it a break and retest, right? So here, like I was saying, we have our uptrend right here, our secondary trend, which is this uptrend. We have our resistance, we have our support, right? Now, the market is looking like it's wanting to break this uptrend right now. So this will be our impulse, correction, continuation, right? Impulse will be the break of this uptrend, correction, which will be the pullback, and then continuation, which will be the continuation of the sale. Now, different terms that people may use for this type of movement is called a break and retest, which I'm pretty sure you guys have probably heard before. So a break is when the market ends up breaking the structure that it was previously in or moving in. So we have the market moving in an uptrend, right? And we have this support. These are our two levels of structures right here. Our first level of structure is the uptrend, because that is the direction that we are moving in currently at the time. And our second level of structure is the support, because it is the new higher low that has been created. So if the market breaks structure, that means it is about to break the buy that it is in. It is about to break the buy and then enter the sell. So what that will look like is the market breaking this uptrend, which means it will sell down, break this uptrend that it is in, instead of continuing with the uptrend like this, creating higher highs and higher lows all the way up to here, which would be the ideal scenario right now to continue with the major swing of the sale. But that does not mean that it won't go up there eventually. It just probably means that it won't go up there right now. So instead of us getting a movement like that, we will get a break, which will be this movement right here. So it broke this uptrend and it has broken the support. Once we got the break, then you do not enter the trade yet, right? Even though we got the break, we do not want to enter the trade yet. What we want to wait for is a retest. Either a retest of the support that is just broken, which would now become a resistance, because support can become a resistance and resistance can become a support. Also, your trend lines can be used as support and resistance as well. So as it continues to bounce off of this trend line, you can basically say that your trend line is used as a support as it continues to bounce off of it. So it could either come back and retest this support level right here that can now become a resistance, or it may go above it just a little bit and come back and retest this come back and retest the trend line and then sell down. But if you look here, if it was to come up here and retest the trend line, then it will also retest the previous resistance that it just created as well. So either one will work perfectly. You would just have to use candlestick analysis to determine where it's about to get ready to sell down at. But if you look here, like we were saying, either one of these can be considered a retest. So it can either retest at this support that would now become a resistance, or it could retest at the previous resistance and retest and bounce off the trend line and use that as a resistance as well now. So simply trading the break and retest is a great strategy that I consider beginners can use. And just to show a couple more examples, I will go over trades that I've taken using this strategy. So Euro NZD, like I said, was the first one that I ended up taking. I just showed you guys the first example of it, or one of these examples of it. And right here, I was just trading a continuation of the trend, just simply trading with the trend, honestly. But we did get a break of this support right here. It never did really come back and retest it. So we really just got in right off the rejection of the downtrend right there. Let's see. So Euro JPY is a trade that's going on right now. So here, as you guys can see, we was in an uptrend, right? We was in the uptrend, and the market ended up breaking this uptrend. Let me get rid of this field right here. The market ended up breaking the uptrend, right? By you could tell by these candlesticks right here. That's how we know that it broke the uptrend. We have these impulsive breaks, these very long red candlesticks, and then it came back and retest. Where did it retest? It retested the previous support that has now become a resistance. It broke this support right here, and it broke the uptrend. So this is like a representation of the example that I just showed you guys with Euro NZD. This is how it plays out. So this was a winning trade right here for 127 pips or 118 pips. So this was a great trade right here. Now, once it came back and retested, that's when you will pop your entry. And this is what I mean by candlestick analysis. So here we had got the wick rejection. And once you get a wick rejection, or once you see momentum slowing down, then that is how you can confirm, okay, the market is more than likely about to get ready to sell down, right? So that's one example that I took. Let's see. Trying to find some great ones. That may be too confusing for y'all. Okay, here goes the good one. All right, so here on Euro USD, same thing. We was in a downtrend right here, right? We was in a downtrend. Now here, remember how I was telling you guys about the primary trend and secondary trend? So here, our primary trend was this downtrend right here, right? But we also can have a secondary trend going in the same direction. So you can have two downtrends, right? And what I like to tell people, I like to tell my students, like, hey, it's okay to have or mark up any trend that you see, right? Mark up every trend that you see. So here we have the downtrend going on right here, and it came up, ended up breaking this downtrend. So our impulsive move was this break right here in this bullish candlestick, the buying candlestick, came back and retested the area or retested the trend. and then boom, it bought up. So break, retest, buy. We identify where he was in the market, right? Overall, the market has been moving up right here in this minor area, or this, this area right here, and then constantly creating higher highs and higher lows. So from here to here, higher low, from here to here, higher high, from here to here, higher low. And then you guys can see our next higher high was all the way up here, which was in the buy that we ended up taking. So break and retest are one of my favorite type of trades to take. Really about the main type of trade that I take, honestly. Another example, which I've showed you guys like in previous videos of my gold breakdown, but I will show you guys again. So here, same thing. The market was in a downtrend right here. It ended up breaking this downtrend, came back and retested it with the wick rejection right here, and then bought up, right? So that's how you guys can trade using a break and retest on gold, or really about any currency pair, honestly. Some more examples are up here. You guys see we was in a major downtrend, right? If I zoom out, the market was in a major downtrend. Then we ended up breaking the downtrend, which is this black line right here. Ended up breaking the downtrend, the impulse correction, which was the retest, the pullback. It retested the downtrend and then continued to buy all the way up to here. So break and retest is one of the best strategies that a beginner can use. One of the simplest as well. It just really takes patience. It takes patience, guys. So as long as you continue to be patient, take your time with your trades, take your time with your analysis and your markups, then you guys will be okay. So first, identify your trend, identify where you are in the market, and then you can use support and resistance to find where you are in the market. And then I don't think they hit my stop loss. No, it did not. I'm still in trades. Okay. So identify trend, identify support and resistance, identify where you are in the market, and then be patient and wait for the break and retest. So here, right here, perfect for knobs. This is first entry and then second entry down here. But we got the break of this uptrend right here, right? And then it broke and it came back and retested. Where did it retest? It retested right at our previous higher low, which is our support that has now become a resistance right over here in this area. So support right here, resistance over here, which is at the retest, and then it sold down. And then we had like another minor uptrend right here. So it ended up breaking that as well. Boom, same thing. Higher low, it broke that, came back and retested it, and now it's selling down. Also, the market ended up creating a lower high from here to here. And it also created a lower low from here to here. So that's how you know that the market is about to continue to sell down. So just practice that, guys. Practice identifying that in the market, and you guys will be all right. Look for break and retest. We also have the same thing right here. So like the market was in a downtrend right here, right? It ended up breaking this downtrend, impulse, and then the correction, which is at the retest of our previous resistance, which is our previous lower high. So it was a resistance right here that has now become a support right here. The market ended up creating a higher high from here to here, which is a sign of a reversal happening in the market. And then it came back and retested it, also creating a higher low from here to here. And that's how we knew the market was about to buy up. So this would have been your entry, and then boom, take this buy up right there. So you guys, I'm gonna let you guys practice that. If you guys want any more content like this or need any help with anything, just drop it in the comments below, and I'll be glad to make a video on it. I'm gonna see you guys in the next video. I'm out.